Hello traders, how are you doing? This is FX Mesh smashing it once again, and in this video I'm going to be explaining what I have titled trend lines. What are trend lines? Trend lines are straight lines that connect or two or more points. These points can be price points and then extend into the future to act as a support and resistance. I'll take that again. A trend line is a straight line that connects two or more price points and then extend into the future to act as a support and resistance. Now I'm going to be taking you to GBPUSD, and I just want to explain what I mean by trend lines. Now, during technical analysis, we first of all start the analysis by a top-down analysis. What do I mean by top-down analysis? What I mean by top-down analysis is you first of all go to the monthly time frame, the highest time frame, and begin to analyze the market from the top to the bottom. And the bottom here is lower time frames. You analyze from the monthly time frame onto the weekly time frame, then onto the daily time frame, onto 4 hours and 1 hour, and just like that. So in this video we're going to start explaining what we mean by top-down analysis before I go over to trend lines. Now I'm on a 1 month time frame and I'm going to explain this. Now on a monthly time frame, what you want to look at is first of all, I'm going to clean all those previous lines I've drawn. All right, we're going to draw, or rather identify the trend of this market. That's the first thing. So what do you think this market is doing? The market is on a range. On a range first. And what is a range? When the market moves sideways. Okay, it moves sideways, and now this market is moving sideways. Now before this market moves sideways, the market was on a trend. This is a trend. This is a trend. Why is it on a trend? It's on a trend because it has built a pattern in the downward direction, and when it got to this area, it started to consolidate. It started consolidating, moving. What I mean by consolidating means moving to the right side. Okay, now back again to trend lines. This is a trend line. The definition of a trend line, as I said before, is a straight line that connects two or more price points and then extends into the future to act as support and resistance. This is a trend line, and this trend line has extended in such a way now it's now acting. It has extended to a point where it's now acting as a support and resistance. Yeah, so trend lines are very, very, very important when it comes to trading. These are the basic and important tools, and these are the preliminary things we need to know why in trading. Now for me, I always take trend lines very serious because trend line helps me to identify the most important points to take entries in the market, and trend lines are very important in your basis as a trader. Now we're going to analyze GBP through the top-down analysis, and in the top-down analysis we're going to explain what we mean by trend line more. So using top-down analysis to explain trend line will make us understand what, or appreciate more about what trend line is all about. Now if you look at, we are still on the monthly time frame, and I just drew these lines just to explain what's really going on the monthly time frame. But the most important part of this monthly time frame we're looking at is we're looking at this last candle. The last candle is a is a bullish candle. What do I mean by bullish candle? A bullish candle is the kind of candle where we have the candle like this. We have a candle going up. It's going up. So we have something like this, and like this. Now a bullish candle, the green candle is the bullish candle, and this bullish candle shows that the candle is going up. Let me try and expand it so you can see what I mean. So this kind of candle means that the market is going up. Now on a monthly time frame, explains that all the candlesticks are one interval month. One candlestick represents 1 month. This is 1 month, 1 month, 1 month. So these are months. So through a 1 month time frame, we can analyze and see what happened in the past. And as at around 2016, 2017, is that the market started to consolidate. It started moving on to the right side. Now, because our main emphasis is on the last candlestick, what we want to do is to focus on this last candlestick. Everything we want to do, every analysis we want to make on GBP is going to be within this one month time frame. Now we are going to I'm going to delete all this and step into the weekly time frame. Now in the weekly time frame, on a technical analysis, we want to start drawing trend lines. Trend lines according to the definition, you see a straight line that connects two or more price points and then extend into the future to act as a support and resistance. Now if you look at this market on a 1 week time frame, you see that the market went up, built up traction and consolidated a little bit in this area. You can see it's consolidated on this area. Anytime I say consolidation, I mean the market is moving sideways. And when the market is moving sideways, well, as a beginning trader, you might not necessarily be able to find opportunities. When the market is moving forward sideways, only experienced traders can actually take opportunities. But the best time to trade, or the best position to trade, is when the market is going either upwards or downwards. Now if you can see this region that I've marked, it's a region where the market started moving sideways. Now before the market moved sideways, you would agree with me that the market was trending upwards. This is, let me draw a trend line to explain what I mean. This is a trend line. Trend lines, trend, you see, it's building upwards, it gained traction and it started moving upwards, and it went upwards and got to this region where this region of 1.37394, then it now started moving sideways, and it moved sideways to the right and a little bit gained bearish traction around this area, and it appears to want to push to the upside. Now this is a trend line from point A to B. Now on the weekly time frame, we're trying to identify the direction of the market, and the direction of the market is for now the market appears to be recovering from the consolidation, because it consolidated at this point, at this region, then it's coming up to this upside. Now this is because this is a 1 week time frame. What we're going to do now is to start drawing a support and resistance. The support and resistance, and when we draw support and resistance, we're going to draw like that, and we're going to find another support. This is a resistance. This is called resistance. The one on top is resistance, while the one under is called support. Support and resistance, top and bottom. top and bottom. Just remember like that. Support. I'll explain more. I just want to draw it to make it look a little bit explanatory for us to understand what we're talking about. Now remember, we started from a monthly time frame. This is a monthly time frame, and we said that the market trended upwards and got to this point and came down. Now, and I mentioned that in the monthly time frame, we are paying attention to the last candlestick. Now, why are we paying attention to the last candlestick? We are doing this because every activity happening in the last candlestick is going to be reviewed in the next time frame, which is the weekly time frame. That last candlestick in the 1 monthly time frame contains all this information. So this is what is really happening in the last 1 month, in the last candlestick, which is 1 month time frame. And in the weekly time frame, what we want to do is to draw support and resistance. Here is our, let us take it away. We have resistance. As a ceiling. That's our resistance. Then we have our support. Okay, so this is our support. Support is always under, and here is resistance. Okay, now we have started to analyze the market using the top-down analysis. Now, support and resistance is a different topic entirely, but what I'm trying to do here is to apply support and resistance, which is one of the fundamentals in trading. So when I'm applying support and resistance here, it makes more sense, it's more explanatory. But I'm going to be doing a video on support and resistance so we can actually understand what it is properly. But now I'm applying the concept of support and resistance in this video. Now this support and resistance, I'm linking it up with trend lines. So trend lines now extend to support and resistance, and our definition says that a straight line is a straight line that connects 2 points. Well, this one connects at least 2 or more points. 2 points, a point here, point A, means a point B here, or a straight line that connects to 2 or more price points. These are price points because this point is represented as this point, whatever is here. So all these points are price points. Okay, now a straight line that connects 2 or more price points and then extends into the future to act as a support and resistance. Now let us explain that definition in this diagram here, in this chart here. Now a straight line, this straight line is showing you that the market was moving into the upside, it gained traction to the upside. Now, and this straight line has now linked, you can even draw this up here like this. The two straight lines now linking to the resistance and the other part is to the support. Now this market, you can see that the market gained traction from here and it got to a point to it got to the resistance area and it rebounced back and it's trying to go up. Now we now step down to the lower time frame. Now in the lower time frame, what happens? Almost similar things, but we're going to be drawing more. Yeah, these are structures. These are structures. This key, this point, these sharp points are called structures. Now we want to identify more areas of interest. This area, this point is an area of interest. Why is it an area of interest? it is an area of interest because there's something happening around this region. And if you look back, our areas of interest are always regions, are always regions, are always regions, are always regions. If you look backwards, draw this trend line back, I mean this area that I've marked, you would see and agree with me that the market tends to come here, hit here, come here, hit here, come here, hit here, come here, come hit here down, came up again, hit here, and went up, came down again, hit here. If you pay attention to what the market is doing, you will discover that that there's something happening around this. I want to clone this so that we can have a very good picture of what we want to do. Now if you now clone this, yeah, that's trading still going on in China, as you can see on the screen. I'm not trading the Chinese currency, so it has nothing to do with what we're doing, but this is just my Facebook information, my FX book. So those are events that happen, house price index. So if you look at it carefully, you see that so what do I do here is I try to clone it, and I produce another size. You see here, I'm marking the areas. I clone it again. I click, clone it, I put it there. I'm just trying to give you a pictorial illustration about what I'm talking about. Trading is all about geometry and psychology. You need to understand the geometry first before you can now start to trade. Now if you look at this market properly, let's leave this one here aside first. Now let's take this out. Now if you look at this market properly, you see that on a daily time frame. Now I want to give a recap so that we can concentrate on what we're doing. Now what I'm doing in summary is that I'm trying to analyze GBPUSD, explaining the importance of trend lines, support and resistance. Right now, and I've said that how do we go about the analysis of GBPUSD or any market? What to do is to take a top-down analysis. Top-down analysis is when you analyze the time frame from the highest to the lower time frames. And I said that on a monthly time frame, the last candlestick is very, very important in analysis. Then when you identify the last candlestick, you have that in mind. And the last candlestick here was a bearish candlestick, which I've shown you before, and I stepped down to a weekly time frame. The weekly time frame is when I started drawing my trend lines and my support and resistance, which I've already done already here. Now on a daily time frame, I scaled down to a daily time frame and I tried to identify areas of importance. Now the area of importance here is what I've highlighted on the green, on the yellow circles. Now if you look at this area I've marked, what we do in trading is that we identify areas of importance. Now you can see that this I marked these places yellow because it's an area of importance. So let's take this one out first. Let's take this one out first. Okay, now that's on the daily time frame. Now on the we now step down to a monthly time frame. I mean, sorry, a 4 hour time frame. A 4 hours time frame, we'll now start looking for opportunities. We're going to expand, and then I'm going to do this one. Let's see. Okay. And where do we look for opportunities? We look for opportunities on this area, this last area. Now, where's the market? The market is here, around here. This is where the market is, right? Now, we can as well we can identify these levels as important area. This is a structure. It's a structure. So what do? We just draw a rectangular line, which is what? A resistance. Again, okay, a resistance, and this is what is the major resistance. You can see how far it is, big it is. That's major resistance. So it means that when the market comes here, it will take a lot of force to force itself through here, break through this resistance. And once the market can break through this resistance, it's going downwards because it's strong enough to break through this resistance. But now let us focus on this area. Now let us see what is happening. If you look at GBPUSD properly, you will discover that the market is zoomed properly. You see that if you look at it properly, if you see that there's a pattern already forming. You see it's already forming. So from time to time, as a trader, the market is going to give you different scenarios, and let's try and make something. Let's take this one out first. Let's take this one out. Let's focus on this. We're looking for opportunities now. Remember, you're on the 4th hours time frame, so we're trying to look for opportunities now. Let's analyze from this region. So let's see what happens. Trend lines. Remember trend lines? Trend lines. This is a trend line. This trend line is showing that the market is trending towards the downside. It got here, it came up here and consolidated for some time and built what? A downward pressure, and consolidated a little bit, came down, came up again, and just started building a pattern upwards. Now based on the previous pattern, you can see that the market has got here and it's coming down. We can as well let's see what's happening around this area. Let's zoom in. Okay, this is a little bit slow. I don't know what's happening. Okay, now if you look at it, this region is very important. We can mark it with an ellipse if you like. So here is very important. So now if you look properly, you see that the market has got to, you see, when you are drawing lines, or the market is not going to give you exact, but what I know, that market has gone, this line is also an important line. The market got here and is trying to reverse. I actually took a sell from here a few hours ago. From here I took a sell because I knew that the market is going to come down and it's going to fall down. So I took a sell at 78 pips so far. So I took a sell there. The reason being is that the trend is very clear. You can see that the market is building a higher high and higher lows. It's doing like this. This is what it's doing. Higher high, higher lows, higher high, higher lows, higher high, higher lows. This is what the market is doing. So what we want to do is, when we want to draw a trend line to identify the pattern it's trying to form. So all these patterns being formed helps us to position ourselves in the right area of the market, where we can now be able to execute correct trades. So because we are on the 4-hour time frame, we can now begin to look for more opportunities. And here I can tell you is a good opportunity. You just take your sell here and just click, and you can put your stop loss here, and you can draw it down to the downside. Yeah, so this is an opportunity. So this market can just write down. It's gonna write. It's expected that it writes down because this line represents an area of importance. Now, this is a rule of thumb you must know. When identifying structures, always pay attention to the area of the structure. This area is the area of this structure. What it means is that if this market is going to go up like this, it's going to go up and go up and go up and go up, and when it gets here, it's going to negotiate its way around here, like build some pressure here, and once it breaks through this level and retests this level, it's going to go up to the upside. So, but what we are seeing now, while we explain trend lines and support and resistance, you can see that after our analysis, after we have analyzed this market from the monthly time frame to the 4-hour time frame, we can see that the market has got here and reversed. It didn't get to this point, so most likely it's going to push to the downside because it's obeying the same pattern as we can see here, as I explained here, which is going to be something like this. Now let's identify it more. It comes here. You see it pushing down to the upside. It means that USD is gaining more strength. Yeah, so this is what we see. This is what we see. You can see that. See it? I'm moving it around. It's quite slow. I don't know why it's slow, but you have an idea of what I'm trying to do. So this is the idea. Okay. Now I expect this market to go down, to follow the same pattern, because up, down, up, down, up, down, up, and down. This is how to analyze the market. Now the market gives you different shapes, different attitudes. This market behavior is driven by different economic indicators. Now this market could be propelled by maybe the Brexit, propelled by Omicron and the coronavirus that is ranging Europe now, and also the strength of the US dollars in the States. So the strength between the Great Britain pounds and the USD is demonstrated in this chart. So we cannot say that the market is trending downwards. Overall trend is downwards. So it's bearish. It's going downwards. Okay, it's going downwards. So the market is pushing to downwards. That's why I've entered here. And on Monday, probably on Monday or Tuesday, we'll see how the market goes, and see how much profit we have made in this direction. So what we're saying is that we believe that the market is going to push to the downside, and once the market pushes to the downside, we're going to be in profit, and we expect the market to end around stop around here, hit here as our take profit. Now this is FX Mesh. If you like what I'm about, please like, subscribe, and share. I'm going to be making more videos on fundamentals of trading, the things that are tools that we need to understand how to trade, how to be in the right side of the market. Being in the right side of the market is very important to be a consistent trader, and amongst all other things. So I'm going to be bringing that to you. I want you to stay blessed and just keep winning. I'll catch you in the next one. Bye.